Hi friends, this is Kishore. Welcome back to my channel. Today I'd like to go through some of the important seasonal charts and also US dollar. It's US dollar is very strong and treasury bonds are falling and market indices. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. So as always we start with the fear and greed index. This week it is in neutral. So we know last week it is in the greed and almost it is in greed and extreme greed for a couple of months and it's back to neutral and back and forth going neutral and greed. And this is the Friday heat map. You can see most of them are in gray, very few are in green color. Utilities, they they're starting bouncing back. I'll show utilities chart in this session, and this is the one I'm very interesting right now. And this is weekly heat map. You can clearly see Nvidia, Apple, the mega caps. They both are down more than 5%. That's put the lot pressure on the equity market. And you can see the energy, XLE. It's lot of stocks went up very nice, and this is a weekly sector performance of various sectors in the S&P. You can clearly see XLE and the XLU are the leaders. Remaining all are went down, especially industrials. XLI, it kicked down a lot, and also the technology. And this is energy. You can see that crude oil, it went up like crazy, like 87, and it may soon hit 90 or 95. As we know, like again, OPEC, they started cutting the production, and also we see like it's recently it is at 65, and from there in last couple of months it hit higher to 87. And when holiday season comes up, oil can go up to 100. And this is a seasonal chart in the month of September. We already know, I shared that seasonal chart in my last video. September is a very bearish month in a whole year, and within this September we can see we are at now 9, and right now we are at here, and we make little bit bounce in this week based on the seasonal chart. Little bit bounce from 19 or 18, where the opex, after the opex it went down crazily. And I also said in my last video, I said like during the SPX dividend day, it market went down more than a percent. And this is dollar. If you see here, dollar went up on September compared to any other month in the year. So dollar performs well during the month of September. After that, October and November it went down, and December is very good for the what are the stocks or commodities depending upon the inversely relationship with the dollar. So I'll talk about that. And this is Dixie DXY US dollar index, and you can see here it went up to the 105. It break my previous low like 104 point something. And so what it means is it break the lower lows, lower highs. The trend of lower lows, lower highs, it break on the weekly chart. If we have another week with the following with the above 104, means it's confirmed. And my next target is 105. Looks like it can go up to 105. From there we can see like whether it goes up or goes down. And this is gold XAUUSD. You can see that even the dollar is went up crazily. It's consolidating, not a big drawdown from in a 2000 to 1932 or 1918. It is staying there. It's not a big drawdown. Maybe one reason I'm thinking is basically you all know like dollar and US gold is inversely proportional. Means if dollar goes up, gold comes down. If dollar goes down, gold goes up. But even though dollars went up crazily, gold did not come down a lot because maybe there is a chance of stagflation. We can talk about that stagflation in my next video, or end of this month I'll make another video on the stagflation, because I see some similarities between 1970s and current economic conditions. That's where I feel there is a chance of stagflation, but I'll talk about this in another video. And this is the gold stock. I may trade on this one. I mentioned in my last video the support is at 15. So right now it is 15.78. But looks like dollar can go up a little bit more. If that is the case, then it can go up to 14. I'm looking at 15 or 14 is a good chance to bounce back in the gold. So this is what I'm right now watching closely in the gold sector. And here are my support and resistance levels. And this is silver, another one. So It is forming a symmetrical triangle kind of thing, and very good support at right now. It is at 21. It's a good support level, but the candle, it's a weekly chart, so the candle is bearish engulfing candle, and the CCI is still going down. So, and as I already mentioned, dollar is still can go up. So I'm expecting it can go up to 19. If it goes to 19, that's a very good buy opportunity in the silver. And this is treasury bonds. So treasury bonds last, this is a monthly chart, last couple of months it is going down crazily and looks like it's like a double bottom. And you can see here in the bottom, you can see the volumes are very very high. And if you do some little more deeper analysis in the treasury bonds, US Treasury bonds are mainly held by a lot of other countries like Japan and China, United Kingdom. Japan is like 1.2127 trillion, and China is like 868 billion. And both Japan and China, they are selling huge in last couple of months. Japan is selling it because they're selling US Treasury bonds, and they're buying their own bonds to keep their economy up. And China also dumping US Treasury bonds a lot. You can see that the red color uh, line, it came down from almost 1200 to 835. So these two are putting a lot of pressure on the treasury bonds. We can see that in the TLT chart. And this is never in the history of US Republic have US Treasury returns fallen 3 years in a row. You can see this one, this chart. It came in the Buffer Global Investment Strategy, Bloomberg. So it says never in the history the Treasury returns are fallen 3 continuous years. And this is the treasury yields TNX. It hit double top, and this is a weekly chart. So last 2 weeks it is there, but not major down or major up. It is consolidating there. So as we see, still there is a huge pressure on the treasury bond selling. It may hit this 4.34. If it cross, then we can see huge pressure on the technology sector, because treasury yields are inversely proportional to the technology sector. And this is how stocks and yields are doing. Stock valuations have diverged from real yields. So basically stock market is a secular bull market, and cyclical means 6 to 18 months. Secular is a 5 years to 10 year is a bullish market, and cyclical is like 6 months to 18 months. How it performs, it depending upon the yields. So if you see here, the US treasury yields, the black one is going down, whereas the stock market is going up. So a lot of divergence in between these two. Either yield should go up or stock market could go down and catch up both. So, and this is another one. The largest 10% of US companies have shrugged off interest rates rises, unlike the bottom 50. So, as we see, like interest rates went up crazily last 13 months. But if you see the top 10% only, they can handle that, and remaining 50%, they are highly depending upon the interest rates. So, the high interest rates put lot of pressure on the lot of stocks in the S&P. And this is earnings related thing. So if you see no earnings here, so in the second quarter, based on the whole earnings, it is down. And previously it is down in 2019 second quarter, and remaining all are better. But this right now, it's giving some negative thing to the stock market. But because it depending upon the forward earnings, so how the next quarter would be is really really important to the equity market to go up. And this is another trap chart. I can say this is a trap chart, because I know, like, in my previous videos, I told about when they mentioned about the put options are very cheap. So that means, and there is no hedging. Big fund managers are not hedging much in the stock market. That gives like, oh, we can go long now. I mean, put options are cheap means stock market goes up. After that, we can see the market is going down. So these are all called trap charts in my book. So this is also, I feel like it's a trap chart. They are saying now, they are telling that lot of money inflows into that technology funds. It came now. It doesn't guarantee how it will be in the next year or next quarter. Will that inflows would be continue or goes down? It tells only the past. And we know already QQQ, or any technology stock, it went up crazily from March and April. So this is one I follow. Like whenever this kind of news came, I look at this chart and I will be a little bit cautious. And this is a SPX chart, and you can see this is a daily chart. On Friday, this is a shooting star. Basically, shooting star means bearish or reversal candle. Why they say is, when the market opens, it opens gap up, or goes up, and from there, during afternoon or during closing time, it goes down and close at the lower of that uh, of the day. But if you see here last 30 minutes, the 10-minute chart in the Finviz, if you see last 30 minutes, the it went up, means I feel like shorts are closing. Shorts, this is called short covering. So short positions are closing, means they're buying back their short positions. So it went up, which tells me, and it happened on the Friday, end of the Friday, which tells me means big managers or big money makers, they're looking next week maybe somewhat bullish. So though it is a shooting star, I'm not considering it's a bearish candle or a reversal candle kind of thing. It may go up little bit. So my targets are 4438 is the first support, because there is a Fibonacci level of zero point 0.5 level, and the next support level is 4415, and the resistance is 4493. So the resistance 4493 is because there is a gap here, and also it's a Fibonacci level of 0.236. So maybe Monday and Tuesday it can go up a little bit, because we already seen there is a short covering happened on the Friday in last 30 minutes. So market can go up a little bit and then come down. And this is QQQ. So this is also daily chart. Again, here it is a shooting star candle, and the volume is very low. If you see here, the volume is very low with the shooting star candle. Again, in last 30 minutes, the short covering is taking place and it went up. So I'm expecting a little bit up in the Monday and Tuesday, and from there it may goes down. So my support and resistance are 363 and 378. And this is IWM. Again, same, the volume is going down. The this is again daily chart, the volume is going down and the bars are going small, narrow, becoming narrow. So there is a chance of bounce here. So my support is 182 and the resistance is 186 and 190. I'm expecting it can go 180, and from there it can go up, because I see some CCI is also getting flattened here. So there is a chance of it can go up to 182 or 180. From there it can bounce to the 186. And this is the last chart, and this is an XLU. So XLU, it's a weekly chart. It is going down crazily in last couple of months. And if you see here, the CCI indicator is getting flattened, and it's forming a descending triangle. So, and this candle is a hammer candle, I mean reversal candle. So I'm thinking it can go up from here, because there is support here and the candle, and also volume is good, and the CC is also getting positive. So my support is 61. If it goes below 63, means it can go up to 61, and the resistance is 65 and 67. So that's all for today. So basically, US dollar is very strong, and treasury bonds are going down, and yields are going up. So it put a lot of pressure on the equity market. And seasonally, September is a bearish week, a bearish month, and maybe next week there may be chance of little bit bounce. But from September 15, after dividend day, I'm expecting the equity market can go down in the next 1 or 2 weeks. That's all. And I see some opportunity when dollar cools off. I see some opportunity in the gold, silver, and some of the other commodities. I'll share those commodities and other commodities I'm looking at in my next video. That's all for today. Hope you like this video. If you like this video, please hit the like button. Please share this video if any of your friends looking similar kind of content. Please watch more videos in my channel, and if you like them, please subscribe. Hit the bell icon so that you'll get notification when I upload a new video. Thanks so much. Bye bye.